Consensus is over, so we are back to our regular schedule. This is all about Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee. Checking in on Bitcoin right now, let's have a live look at the CoinDesk Bitcoin price. XBX index is trading at 36,837, or pardon me, 36,219 right now. Bitcoin is down over the past 24 hours, about 7.4%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, let's take a look to consider the consensus bump. This is straight out of CoinDesk lore, but it appears that Consensus 2021 is seeing a repeat of the so-called consensus bump phenomenon, which is to say that Bitcoin's price saw a rise since the launch of the conference and held on to its gains into the end of the conference. So how real is this effect, though? It might depend on what you use as your benchmark. Some people refer to the bump being a run-up in prices in the days and weeks preceding the conference. Others refer to the price performance during Consensus the week itself. CoinDesk Chief Content Officer Michael Cathie sticking to the latter and comparing charts over the past 7 years of Consensus conferences. In 2020, we again saw, when we had that, here we go. In 2020, we again saw the Consensus bump start where you see that red line. And we did see a rise in prices again in all 7 years, with the exception of 2018 and 2015. I think we had the 2015 chart there. So you see the red line, that's when the conference started, and we saw a decline. So we do see that during Consensus, nevertheless, the odds are that Bitcoin goes up. So joining me to discuss BTC price and other Bitcoin news is our Week in Review panel, CoinDesk Managing Editor of Technology, Christy Harkin in Toronto, Managing Editor of Markets, Brad Cowan in Austin, and Director of Data and Indexes, Galen Moore in Boston. Welcome, everyone. Galen, the consensus bump, does it exist or inconclusive at best? What's going on here?
Christine, I can certainly remember sitting outside with application developers in the 95-degree heat in the days leading up to Consensus 2017, checking our phones and watching the price of ETH moon at that time. That was about $164, the pre-consensus high for Ether there in 2017. But the truth is, there's really not much these days, I think, that can really create a bump in the Bitcoin price. If you look at the events of the past week, we had Ray Dalio on at Consensus revealing that he owns Bitcoin. It was not a surprise to me personally, but I can certainly think of a time when that, or something like Carl Icahn saying he intends to buy $1.5 billion worth of Bitcoin. Those events, I can certainly remember a day when that would have sent Bitcoin on a round trip to the moon and back. These days, the honey badger just doesn't really seem to care anymore. There doesn't seem to be very much that can move the price like that.
Yeah, we actually, Galen, we have a clip of Ray Dalio when he spoke at Consensus to Michael Cathie. Let's have a listen.
This year, we've seen institutions like yours. I mean, I don't know whether you guys are actually bought any Bitcoin, but I certainly know that you're interested in it. We've certainly
I have some Bitcoin. Yeah, I think Bitcoin's greatest risk is its success. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin, and they want to do that in a bigger way, like buying gold or something in a bigger way, and then there's more transaction. They lose control over that, and that's an existential risk.
So Galen, as you hear that clip, and as well as news that Carl Icahn also wants to invest in over $1 billion into Bitcoin, we have this continuing chorus of billionaires buying into Bitcoin, but at the same time, talking about the risks as Dalio had. What do you make of that?
That was my favorite quote from day one of the conference, Christine. In fact, we included that in the Hard Fork newsletter that comes out of CoinDesk Indexes. I think it's a spot on point, right? Like the the more institutionally relevant and the more macro relevant Bitcoin is, the more risk there is of crackdown, control. I think the other side of that coin, which certainly a lot of Bitcoiners appreciate, is that the more the bigger Bitcoin gets, the more difficult it is to control in that way. And I think, we've seen that. We've seen people kind of coming to terms with that over the past couple weeks with the news of the China crackdown and the Bitcoin Mining Council. There's a kind of another cycle of realization that these kind of quote unquote centralization problems are not necessarily problems at all. Once again, the honey badger does not care.
On that point, Brad, inflation was a huge theme during the conference, and Ray Dalio touched upon that as well, where he said we're going through several cycles, and in this one in particular, the government as well as central banks are injecting a lot of credit and debt into the economy, which is a short-term stimulant, but a long-term depressant, and that causes everything from real estate to stocks to Bitcoin to rise. Do you agree?
Well, if you listen to the smartest people on Wall Street, I covered banking in New York for a long time, and I used to go to the Council on Foreign Relations meetings. And I remember one time Ray Dalio spoke there, and literally all the titans of Wall Street were at that meeting, from the biggest bankers in New York to the biggest hedge fund managers. And they were, hanging on every word Ray Dalio says. What I think is maybe, separate from what Ray Dalio thinks and, what Paul Tudor Jones thinks and what kind of every Bitcoiner thinks, that inflation is here. And if you just read any of the newsletters from Bloomberg or Wall Street Journal or the New York Times, DealBook or Reuters, inflation is at the top of their list, as is crypto, which is pretty fascinating. Just how crypto has just absolutely shot to the top of the agenda. And it's because of, crypto technology taking off and people trading them and the price is going up. But it is also because there's this whole sense that, central banks are flooding the world with money and it's going to ultimately drive inflation. So we had that inflation report out today. It was the PCE inflation, which is the Fed's preferred measure, and it came out a little bit faster than expected. But I was reading a report; it's the fastest year-over-year rate in 29 years since 1992. So it's kind of like the question of did Bitcoin prices run up because it's a good inflation hedge, and is that going to keep going up, or is that already in the price? I mean, either way, we are seeing inflation going up. The Fed, of course, categorizes that as.
Picking back off of that whole inflation debate, we have a clip from Cathie Wood of ARK Invest, who says that all this inflation will have an effect on potentially central banks wanting to buy into Bitcoin. Let's play that clip.
I think there will be this insurance policy that a lot of individuals and businesses will be taking out. And in fact, I wouldn't be surprised if some of these emerging market central banks start accumulating Bitcoin and other currencies. So because if they know their currencies are going down, and that they will be under attack as reserves go down, maybe they'll have a balance with Bitcoin and other crypto assets.
All right, building on top of that, Cathie Wood also mentioned, we're seeing inflation potentially increase and contribute to the rise of Bitcoin, but also Cathie mentioned that she blames ESG, environmental, social, and governance concerns, to the crash of the crypto markets that we've seen in recent weeks. And this whole ESG movement was made especially at the forefront of top of mind of people, with Elon Musk saying that Bitcoin may not be sustainable in its current state. And Michael Saylor, CEO of MicroStrategy, who has bought a lot of Bitcoin, called in Elon Musk as well as Bitcoin miners to talk about how they could bring greater transparency with this Bitcoin Mining Council. Christy, I'm sure you have some thoughts on that.
Well, the idea of the Bitcoin Mining Council has actually taken up a lot of space this week. People have been talking about it an awful lot. And I think that there may be a little bit of overreaction to the whole idea. So what happened was we had an opportunity, actually, I had a chance to talk to Peter Wall, who's the CEO of Argo Blockchain, right after this happened. And what he said to us was that within the council, we're not talking about Bitcoin code or block size or anything related to changing the nature of Bitcoin. They have a publicly traded company that was one of a handful of mining firms that did meet with Saylor and Musk. And we're talking like mining firms that take up maybe 10% of, if that, of the global Bitcoin hash rate. So it's not like they're all getting together and creating a cabal to control Bitcoin mining. As he put it, we all love Bitcoin the way it is, as a decentralized, permissionless system. So the council's two goals were to promote, well, their two stated goals were to promote disclosure of and improve energy practices. So beyond those broad objectives, the companies haven't agreed on anything else. The focus is energy transparency and improving sustainable mining practices and educating the public, which, given the recent publicity surrounding Bitcoin's energy consumption, thank you, Elon Musk, that's hit Bitcoin pretty hard. We also, and this was, I believe, at Consensus, spoke with Fred Thiel of Bitcoin miner Marathon Digital, and he pointed out for a publicly traded company with over a $2 billion market cap, ESG, which is the environmental, social, and governance, is important to shareholders. Big listed firms, which many of these miners are, have to meet institutional investors' expectations for corporate social responsibility. And Cathie Wood pointed out that same thing last night at Consensus when she suggested that the recent price drop was precipitated by concerns over some real environmental problems with mining of Bitcoin. Again, thank you, Elon Musk. So a lot of institutional buying has gone on pause, and we expected that to just keep rolling and rolling along, and then, not so much. So as she pointed out, Elon Musk probably got a few calls from investors, from institutions, and like BlackRock, for example. And Larry Fink, the CEO, is really focused on ESG and on climate change. And so are many millennials who are looking closely at their companies and their portfolios. But one of the really cool things that is coming out of this discussion is ways that we're looking at how Bitcoin mining is kind of putting the energy discussion forward. So Thiel and Wood also addressed the way that Bitcoin has the potential to harness and take advantage of renewable energy that is often otherwise just wasted in transmission lines. You produce it somewhere, you have to move it somewhere else, and a lot of energy gets lost. So what Bitcoin can do is co-locate mining facilities where the energy is actually being produced. Solar has peak productions in the middle of the day naturally, whereas wind has peak production in the afternoon. And all this renewable energy that's being generated at these times has to be consumed. It's a case of use it or lose it. So if we co-locate Bitcoin mining facilities at or right near the sources of the renewable energy, then the miners can tap into it. And this is all part of what we kind of are referring to as the Bitcoin battery effect. And Cathie Wood alluded to that in her talk as well. So mining and renewables can grow in tandem with Bitcoin acting as a battery to soak up excess energy produced from intermittent sources like wind and solar. And it inspires investment in renewable energy innovation, because investors can make money off of this kind of production. And that's not just good for Bitcoin, but for the planet as a whole.
That's great. I think it is fantastic that people are actually talking about the environment and incorporating into this, into the narrative as this industry progresses. This week, we also spoke to Crypto.com CEO Chris Marslick, who announced on CoinDesk TV the exchange will go carbon negative within 18 months. And that was inspired by these talks that are happening in the industry right now. Now, looking ahead to next week, though, President Biden has just unveiled or is about to propose a $6 trillion budget. Do you think that'll have an effect on Bitcoin price, Brad?
Well, I mean, it's out there, it's part of that broader inflation narrative, money going into the system. I mean, Michael Casey, CoinDesk chief content officer, is out with his column today saying that he thinks we're going into a new crypto winter. I mean, probably signals are out on that. A lot of people think we are still in this kind of early stage of adoption, but to Galen's point, some of this news that maybe in the past would have been super bullish, Ray Dalio coming out saying he owns, and Apple, PayPal news, and it's not driving things higher. And it seems like we're kind of now stuck in a new range that's 38,000 to 42,000 ish, which is still pretty far below that $65,000 high we saw just in April. So, there's one analyst who was saying today that, this overly bearish tone could result in a violent, rally, which sometimes happens, but, it's looking pretty uncertain right now, but kind of bearish, I think.
Galen, are you getting a sense from the earnings results that you're watching next week about what direction the crypto markets can go? And we have to wrap soon, so we'll just keep that in mind.
Well, honestly, I think it's worth paying attention to macro in the context of crypto at this point. I mean, we're entering this new phase where crypto has this kind of more consistent place in the macro conversation. Now, how the interplay works is yet to be really broadly understood, I think. It's not as simple as risk on, number go up. The investor base of Bitcoin and cryptocurrency in general is just too varied. The market's too fragmented for that. But I do think we're entering a world in which that plays out. A couple of earnings reports next week that are kind of on the work from home meme stock front would be Zoom and Slack, both reporting. And then, of course, we've got the non-farm payrolls on Friday that everybody will be watching closely.
Christy, also, Bitcoin Miami is happening. I'll be going, but I don't think you can go yet. But
No, I can't go, but CoinDesk will be there. And what I'm looking forward to, I want to see if maybe we're going to get a Bitcoin Miami bump. If we can't get too much of a consensus one, maybe we'll get a Bitcoin Miami bump. But I'm looking forward to hearing reporting from on topics like Lightning, building businesses on Lightning, infrastructure development. There's going to be sessions on banking the unbanked with Jack Dorsey and Alex Gladstein that I think is going to be pretty interesting. Lots of stuff on art, NFTs, on Bitcoin. Crypto Graffiti will be talking about that. And Senator Cynthia Lummis, who was also speaking at Consensus, will be discussing bringing Bitcoin innovation back to the USA with Representative Warren Davidson. So there's lots of cool stuff going to happen. And of course, they're going to talk about Bitcoin mining and energy.
Yep. And I will be in Miami next week, so we'll have this edition of All About Bitcoin on next Friday from Miami. All right. Thank you, Galen. Thank you, Brad. Thank you, Christy, for joining me this afternoon.
Have a good weekend.
Happy Friday.
Have a good weekend. All right, that was our CoinDesk Weekend Review panel with Managing Editor of Technology, Christy Harkin, Managing Editor of Markets, Brad Cowan, and Director of Data and Indexes, Galen Moore. And that's it for All About Bitcoin. I'm your host, Christine Lee. We're off on Memorial Day. We'll do this all over again, though, on Tuesday at 3 p.m. Also join me Tuesday morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.